$75 job can cost a service business more than it earns. Not because the materials were expensive, and not because the work took too long. The loss often happens before the technician even touches the job. Travel, scheduling, quoting, loading equipment, setup, cleanup, invoicing, and payment collection all consume time. If your minimum price ignores those fixed activities, small jobs quietly use your most valuable hours at the lowest return. In this video, we will calculate a minimum service call price from the ground up. We will use a realistic example, include the costs customers never see, and test whether a $150 minimum is actually enough. Imagine a mobile service business receives a request for a small job. The hands-on work should take 45 minutes. At first glance, it looks easy to price, but the clock does not begin when the work begins. The owner spends 10 minutes responding to the lead and preparing the quote. Loading and checking equipment takes 15 minutes. Driving to the customer takes 25 minutes. Setup takes 10 minutes. The service itself takes 45 minutes. Cleanup takes 10 minutes. The return drive takes 25 minutes. Invoicing and payment follow-up take another 10 minutes. That 45-minute job consumes 2 hours and 30 minutes of business capacity. This is the first rule of a minimum price. Count the complete service cycle, not only the time spent performing the visible task. Now we need the real hourly labor cost. Suppose the employee earns $24 per hour. Wages are only the starting point. Payroll taxes, workers' compensation, paid time off, training, and other labor burden add 25%. $24 multiplied by 1.25 produces a loaded labor cost of $30 per hour. 2.5 hours of business time therefore creates $75 of labor cost. Next, add vehicle expense. If the round trip is 30 miles and the business uses an all-in vehicle allowance of 70 cents per mile, travel adds $21. Materials and consumables for this small job add $12. Equipment, wear and replacement reserve add $8. We also need overhead. Assume the business spends $6,000 per month on insurance, software, phones, advertising, storage, office work, and other operating expenses. If the team can realistically sell 400 labor hours each month, overhead costs $15 for every sellable hour. The complete service cycle uses 2.5 hours, so allocated overhead is $37.50. Now add the costs. Labor is $75. Vehicle cost is $21. Materials are $12. Equipment reserve is $8. Allocated overhead is $37.50. Total cost is $153.50. This means a $150 minimum would lose money before any card fee, tax, warranty callback, or profit. To build a sustainable customer price, solve backward from the target margin. Suppose the business wants a 30% profit margin and expects a 2.9% card processing fee. Divide the total cost by 1 minus the target margin minus the processing rate. $153.50 divided by 0.671 produces a required price of approximately $228.76. At that price, the card fee is about $6.63. After paying the $153.50 of operating cost, estimated profit is approximately $68.63. That is 30% of the selling price. For a customer-facing minimum, the business might round the result to $229 or $235. Rounding should follow a consistent policy, not a guess made during each phone call. This number is not universal. A dense service area may have shorter travel time. A solo owner may have a different labor structure. Some companies can combine nearby appointments. Others carry expensive equipment or operate in areas with high insurance and advertising costs. The point is not that every company should charge $235. The point is that every company should know what its minimum must cover. There are 4 ways to improve a minimum service call price without simply raising it. First, reduce the fixed time. Use intake forms, save quote responses, route planning, and automatic payment reminders. Second, create service zones. A lower minimum may work close to the shop while a travel surcharge or higher minimum protects distant appointments. Third, bundle compatible work. If the customer already paid for travel and setup, an additional service may add revenue without repeating every fixed cost. Fourth, qualify leads before dispatch. Photos, measurements, and a few specific questions can prevent a technician from arriving at a job that cannot be completed or should have been priced differently. Do not hide the minimum until the invoice. State it early and explain what it includes. A professional minimum is easier to accept when the customer understands that it covers a prepared, insured business arriving with the right equipment, not 45 minutes of isolated labor. Here is the complete calculation. Measure the full service cycle. Calculate loaded labor cost. Add vehicle, materials, equipment, and allocated overhead. Include percentage-based fees. Then solve for the selling price that leaves the intended margin. Review the result after real jobs. If 2.5-hour service cycles regularly take 3 hours, update the assumption. If route density improves, the minimum may change. Pricing should use records, not memory. ServiceQuoteLab builds editable estimating workbooks for owner-operated service businesses. The tools separate labor, travel, materials, equipment, overhead, fees, and margin so you can replace every example in this video with your own numbers. The complete collection is linked in the description. Before using this example for a customer, replace every assumption with your actual costs, taxes, fees, production rates, and operating conditions. No price or profit is guaranteed. Subscribe for practical service business pricing lessons. In the next video, we will calculate the true hourly labor rate that must be recovered before a job earns $1 of profit.